So let's bring in our all-stars to talk about all this. We have Joe Battipaglia, Stifel Nicholas, Kudlow & Company contributor Jerry Bowyer, Benchmark Financial, CNBC contributor David Kotok from Cumberland Advisors, Jim LeCamp, RBC Dane Rauscher, and a special added attraction tonight, banking consultant Bert Eli of Eli & Company. Welcome back, Bert. Haven't seen you in a while. Thank you for helping us. But let's just have some fun with this huge financials thing. So, Jerry Bowyer, let me get this right. Chris Cox, so I see, is something of a free market conservative turncoat. Now, he doesn't want price signals to work. You can't short financials. That's what I read into this. And he's having a, what is it, it's sort of a witch hunt here. SEC subpoenas Wall Street and hunt for manipulators. This is, you know, kind of like reckless traders and obscene profits and price gougers. So maybe financials went up big because we can't sell them anymore. I'm only being slightly tongue-in-cheek.
Yeah, but in the long run, I think the more you limit the number of contracts that security can be that you can enter into for a given security, in the long run, you actually hurt the stock price. I mean, if you lock up markets so that someone can't short it, they don't want to be in that market in the first place. So this is, I mean, the Democrats go after oil speculators, and the Republicans are now going after alleged speculators in these financial stocks. This is crazy. The people, we need the short sellers. We need somebody in the world who, when a CEO or a president or a central banker gets up and gives a speech, we need people who can say, bull, I don't believe you. I think you're lying. Short sellers are the market's version of whistleblowers. Without short sellers, we never would have found Enron. Without short sellers, we never would expose some of the weaknesses in many of these companies.
Those are great points. So, David Kotok, I mean, in a sense, this is a form of protectionism. You can't short Fannie, you can't short Freddie, what is it, Lehman, Merrill Lynch, Morgan Stanley, Goldman Sachs. This is protectionism, and I hate protectionism.
I hate it too, Larry. No one goes after long speculators, only short speculators. We don't have symmetry anymore. We're not permitting people to take losses, and we're eliminating, as was previously argued very eloquently, market disciplinarians. And when a short seller is wrong, they are punished by the market. This is a two-sided trade. They have lifted one side. It will hurt investors, not help them.
You know, Joe Battipaglia, welcome back. It's a weird story now. I'm starting to call it the new socialism. First, I called it Republican socialism, but actually it's bipartisan socialism. And I'm starting to think that Phil Gramm was right. We are a nation of whiners. You know why? In America today, nobody can fail. Something goes wrong, you lose something here, you get bailed out. And here's the chairman of the Security Exchange Commission. He's supposed to be some great free market, supply-side conservative, and he's leading the cheers. And actually, some people think he didn't have to do any of this because already had regulations on the books about those few people that you know, didn't have possession of the stocks before they shorted it, whatever. But the point is, nobody fails. Everybody gets bailed out. Fannie, Freddie, homeowners, all right, the FHA bailout bill's coming down the road. That's going to pass in this session of Congress. Now you can't sell certain banks, the Wall Street Investment Bank. What is going on here, Joe Battipaglia? This cannot be good. That's what I'm driving at.
Well, you're really making my skin crawl, but the fact of the matter is the government is socializing the real estate and mortgage industry. Recognize now that Fannie and Freddie are now responsible for 80% of the mortgage activity that's going on today. The House and the Senate are about to put a bill to the President that supposedly will try to interfere with the due process of 400,000 homeowners and their mortgages to change the terms and conditions in which they operate. And here's the SEC with the chutzpah to say we're going to push the short sellers out of the way because they're at fault, yet the SEC was the regulator on watch when Bear Stearns went out and said nothing about conditions there. So suddenly the free market mechanism, these government bureaucrats are telling us the government is a better mechanism than the free market. Nobody's buying it, and that's the current dilemma that's going to press us in the months ahead.
So, Bert, before we get to Indy Mac and Wachovia and all the rest of this stuff, you want to defend Cox? Somebody's got to defend him. I'm amazed nobody's defending him on this panel. Jim LeCamp is waiting down in Texas. Go ahead, Bert, take a whack at it.
Well, I think, as I understand it, what he's going after is just the naked short sellers. Obviously, short selling is a very important market discipline. I fully agree with that. We want that to continue in an unfettered way.
All right. So you're basically punting also. You don't want to mess around with that. Before we get to the aforementioned Jim LeCamp, let me ask you this. The huge rally today in financials. Okay, you had a lot of these stocks up 30%, whole bunch of them up 15%. Maybe it's a dead cat bounce. Maybe it's the bottom in financials. I'm not smart enough to know. Other people on this brilliant panel are going to be able to inform us. First of all, Indy Mac, Bert. I may be late to the party on this, but there are more stories. There's another big story in the front page of the LA Times today. Confusion at Indy Mac fuels customers' anger. And I just want to ask you, Bert, number one, is it possible that, at least until today, the crashing of bank stocks in general was affected in the last week by the Indy Mac close down, which Chuck Schumer had something to do with? And number two, the performance of the FDIC, the deposit insurers in this. Give me a quick little pithy wisdom on this Indy Mac story, FDIC, and whatever else is on their problem bank list.
Well, Indy Mac was doomed to fail. It engaged in very risky lending. It grew too rapidly over the last year. But the regulation of it was fumbled. Schumer didn't help things any by publicly criticizing the regulators on it. They were caught unprepared with their pants down in dealing with it, and it's been a mess. And quite frankly, what it's done is it's rattled an awful lot of depositors, I think unnecessarily. Not sure how much that's contributed to the problems in some of the bank stocks. I think there the concern is that these losses just continue and continue and continue. And for whatever pickup we may have today, tomorrow they may tank again, for all I know.
Just a quick one, Bert. The FDIC problem bank watch list. Now, we're nowhere near where we were, so far as I know, 18 years ago in 1990 when this was front and center. I mean, I think we lost 1,000 banks and thrifts at that point. But Sheila Bair is trying to say it's going to be okay, and we appreciate her soothing words. I want to ask you, is it okay? How many Indy Macs are out there? There's another headline that came across later in the afternoon. The FBI is looking into Indy Mac Bancorp. Now, this is another one of these witch hunts against subprime lenders. We're going to have Jerry Bowyer and others comment on that in a minute. But are there other Indy Macs out there? Is this in the consciousness of America today, Bert?
I don't think there's another bank failure coming the size of Indy Mac. Indy Mac was very large. There are going to be some other failures. We're going through a necessary credit correction right now. There are a number of banks that did risky lending, particularly to home builders and developers, doing risky mortgage lending, and they are going to be failing. But the banking industry overall is pretty strong. It's stronger than it was 18, 20 years ago. We're not going to see anywhere near the number of failures that we saw back in the 80s and early 90s.
All right, well, that's reassuring. Jim LeCamp, you going to buy financials now? You ready after a day like today?
Today was a shot across the bow, and I normally don't try to just guess at a bottom. I liked what I saw in the financials, but it was muddy. And the reason it was muddy is because of what you said. They changed all these rules. They're talking about attacking short sellers. At the same time, you had Wells Fargo come out with a really strong quarter. Well, guess what? Wells Fargo isn't one of the problem areas that people have been worried about. They've been more worried about names like Wachovia and WAMU and Lehman Brothers for that matter. So we don't know yet. All we know is that we had a good sign today. There was good volume across the board. And so I look at days like today like a shot across the bow. Now I wait and see. Bottoms normally don't turn on a dime and come straight back up. They bounce, they test for a while, and then they turn up. And that's what I'm going to be looking for. I'm not ready to call this a bottom yet.
What about the energy story? I mean, I think it's pretty amazing that George Bush comes out, 2 days ago, and announces a repeal of the executive branch moratorium on offshore drilling and other aspects of domestic production. Now, on this program, I have been arguing, others of you have been arguing, the minute the traders see the strong potential for more drilling, offshore, onshore, shale, whatever, Alaska, Anwar, that they will start selling in the futures market, and that'll backwardize its way right up into the cash market. Now Bush comes out yesterday with a second strong statement, really turning up the burner on Congress, Jim. And look what happens. Oil just starts collapsing. You know, instead of some goofy second stimulus package to give consumers more worthless rebates and hand out billions of dollars to state and local and community group slush funds, why doesn't Congress remove the moratorium, which is going to be operative, and that would get oil prices down maybe another $20 or $30, and that would really help consumers and stimulate the economy. What's your take on energy, first of all? Do you want to buy it or sell it on this moratorium business? You're down there in Texas. That there's the hottest state in the union.